Time now to see what's on the radar. And we have Bruce Murray here, the CEO and CIO of the Murray Wealth Group. Bruce, you want to talk about AI still dominating. Of course, it's what everybody is talking about. You still like it, and there's a couple of stocks you like as well within it.
Yeah, so we think that obviously the AI boom going on is the main thing driving the driving the stock market, and will do so for the next several years as we bring on AI right across the economy. It's going to lead to massive productivity gains, especially in the office areas and things like that. And but it requires a lot of power. And the math, I haven't done the math, but I've been told the math is it's going to take 8 to 10 years just to build the power supply to run AI. So I think that our low risk way to play this may be to buy some of the power companies in Canada, like Capital Power or TransAlta, and there's a few others. Even Pembina Pipelines got involved in announcing that they're going to build a power plant in Alberta. And Alberta is going to be a beneficiary of this because of the large supply of very cheap natural gas. And natural gas is the fastest way to bring on electricity at the moment.
Okay.
And so I think that's good. But I think, we want to stick with the major players like Alphabet, Amazon, Microsoft, and Meta, as they have massive cash flows from their current businesses, advertising, and apps on the internet, and that will allow them to fund the necessary capital expenditures in AI, which will be massive. And we've already seen a lot of controversy in the market over AI, especially we've had a lot of the pundits saying, it's a repeat of the bubble in, the late 90s. It may get there, yeah. But I think we're a long way from that at the moment. We've still got 3 to 5 years of infrastructure build to get to that point.
Now, two of those that you have on your radar is Alphabet and NVIDIA. What do you like about those two ahead of all the other ones that you were just talking about?
Well, I mean, let's sort of talk. NVIDIA is the key arms supplier to this. With their chips are well in front of everybody else's, and they're the best performing chip in AI. So they're sort of sold out. And they've got they're going to grow 500,000. I think he said they've got huge orders, and the orders will keep coming in until someone gets tired of it, or they run out of money, or AI gets built out enough. And so it's sort of, that'd be the way to play. The NVIDIA will be the big money maker, the easiest way to play it over the next couple of years. But longer term, you want to own the Alphabets, Amazons, where the actual beneficiaries of the revenue is going to come through to the AI players themselves, who have the apps, the AI apps. And so it's sort of you buy the arms suppliers early in the business, and you buy the people who are going to benefit from longer term. And I think so we own both, and because the Alphabet, Microsoft, Amazon are lower risks than playing NVIDIA and Broadcom, for example. Mm-hmm. But we still think NVIDIA and Broadcom, you can make more money in the short term.
Okay, and then we'll just throw this one in from kind of left field to a degree. Major Drilling Inc., you like that as well?
Yeah, so, every morning when I come into work, there's another gold mine being looking for financing, or a copper mine or something like that. And so there's been a massive buildup of cash to start looking for resources. And as I said, the old gold mine in 1890 is in the Yukon. Mm-hmm. The people who made money were the picks and shovel suppliers. And so Major Drilling, I think, and we're starting to see it now, the pickup. They're the largest driller in the world, and they've got the best technology in the world. And so I think you're going to see a massive boom in this. If you could put up a stock chart of it.
Yeah, we have it up right now. It's up 53% for the year.
Yeah, okay. But if you go back and look at 2008, 2013, which were the last time we had exploration cycles, I think it was 2007, you see the stock just rockets.
Can we pull that up, the 20-year chart? All right, thank you. They're working on it. They're working on it, Bruce. Keep going.
Thank you. So, you know, this cycle is going to be bigger than those, and I think I can't. I don't have the chart in front of me at the moment yet, but it was a return of I think it got over $20 a share, a couple or $18 maybe in 2013, if I remember correctly, and $22 or something in 2007. So this cycle is going to be bigger than that. So the stock should surpass those numbers and be more than a double, and it's it's well financed. It doesn't have a lot of debt, so it's a pretty low risk way to play the exploration boom and the mining boom.